Good morning, traders. Welcome to GameEdge's pre-market prep on Friday, July 25th, 2025. As always, here at GameEdge, we'll start with our three pillars: sentiment, structure, and trend. And then we'll look at our 0DT overall structure as well as our game plan heading into today. Again, thanks for joining us. Make sure you like and subscribe on YouTube and follow us on X. That way you'll be notified when we post any content or go live intraday with any of our broadcasting or programming. And also come join us at gameedge.us in our Discord. We have a great community, provide a significant amount of education along with our free education that we provide on the weekends. So come join us and learn how to get up to speed using Gamma Delta, Charm, Vanna, and any of the other mechanical portfolios that we produce or post every week. So starting with the market trend model, this is based on our tick index. Quick takeaway is that's buying versus selling within the overall market. The key component we want to look at is this bolded white line. That's our intraday instantaneous CT or cumulative tick. Again, if it is sloping from lower left to upper right with a positive slope, that would indicate more buying versus selling within the overall market and market participants. So as of yesterday, we did see a slight weakening or consolidation into the afternoon in the bolded CT. We put these shorter term moving averages on for momentum or trend indicators. Again, for reference, and we want to see this bolded CT be above those moving averages and obviously in a positive slope to the upside. So we'll see how we continue to play out today. Obviously, we've had a significant move in the overall market, so some consolidation and pullback would not be out of the realm of possibilities heading into today, but we'll look at our overall SPX option structure, which continues to maintain significantly bullish. So just again, a feather in your cap to keep an eye on. Watch this market trend model as we post intraday, or if you're a member and have access to this or following us, then again, we'll continue to watch this. A longer look back period, our colored ribbon, red above cyan, again, longer positioning within the overall market trend, continues to the upside. Significantly bullish with the red above cyan and positive slopes. Yesterday, our breadth indicator, new highs versus new lows, new highs outpacing, obviously significantly, but our overall filtered cumulative tick, which is your block orders plus 1,000 minus 1,000, was below the zero line, so indicating that institutions or larger market participants were selling more than buying yesterday. Again, not by a large amount, but just an overall marginal staying below the zero line as well as our cumulative tick. So again, we'll keep an eye on this. With some other things that we're watching that I'll go over here in a few minutes. Moving on to the SPXA, obviously this is a larger market participants and players. These contracts don't turn over as rapidly as the SPXP. So we separate these so we can get an overall 40,000 foot view and then zoom in with the SPXP via the 0DT as well as some weekly expiries. Quick takeaway, call dominated above and below spot price. Green net delta completely up and above and below spot price, so obviously nothing changed here in the overall bullish structure. You can pause your player and read this, and if you want to know about education or discuss this, you can ask us or come join us in Discord. But really no change here. 6,500 up there is PGEX. We see the transition levels here has moved up to 64.45. So again, just an overall bullish structure with institutional positioning, and you can reference the expiries down below. Moving on the SPXP. Again, all expiries turned on here. Again, quick takeaway, call dominated above and below spot price as via the green net deltas. So again, bullish overall structure. You notice the transition level here, and then a few other strikes we pointed out. Obviously, the JPM short call strike up there at 6,500. Does that become an area that we move up towards and become a magnet level? We'll check that out and continue to watch that and monitor it as we head into the overall expiry of that. Again, noticing that today we have 27% of the overall gamma being removed from the complex. So again, we'll see where that's repositioned heading into next week. Again, but just some areas to keep an eye on, some local strikes that you may want to put on your chart for interest. But again, call dominated bullish. Above and below spot price and through this whole structure. Moving on to a tool that I don't think we've talked about live in a significant amount, but I wanted to bring it out today to just show an overall divergence that we were seeing in this. This is a true zeros history of the SPXP. This is price removed, and basically this is just looking at the overall structure of the SPX and where the overall zeros are within the overall structure. So again, if the zeros are continuing to drop, that would be indicating short-dated call gamma is leaving the overall complex, and short-dated put gamma was being entered in the complex. So again, another divergence, just a feather in our cap to watch for. We talk about this with the GEX ratio as well as the delta balance. So again, what you'd want to see is you'd want to see this overall true delta zero and true gamma zero start to turn back to the upside, indicating that we most likely have a price appreciation with the SPX. But if again we continue this divergence with the zeros dropping, with price moving higher, then we'd start to look for the resolution of one of two ways. That would be the SPXP dropping in price, or again a resolution of the upside of the true delta zeros and gamma zeros, or they would keep dropping, and then obviously, as I said, SPXP price, or SPX, sorry, price would continue to follow that dropping. So again, this is just giving us a look into the overall positioning of market participants on out in time, and short dated with the overall structure. So indicating obviously we're seeing a drop in the overall speculation to the upside within the overall SPX structure. Moving on to this GEX ratio for the SPXP. Again, we've discussed this divergence we've seen a few times and how this will play out. Again, we're above the 1. So again, that's call speculators and bulls are in control of the overall market. But again, what we like to watch is divergence as SPX price moves higher, and we're seeing the SPX GEX ratio drop. So this again is indicating short dated call gamma leaving the overall complex and maybe replaced or overriding with short dated put gamma. So a significant drop in this would be indicating that market participants are hedging to the downside with out of the money put speculation and removing that out of the money call speculation. And then if we continue to drop, obviously we would be removing those in the money calls below us. Again, not that that is occurring at the moment, but just again, feather in your cap to keep an eye on if this continues to drop as SPX price continues to ride higher. We'd anticipate this to resolve again one of two ways. The overall short dated call gamma would turn back to the upside, and then we'd have price appreciation with the SPX, or again the SPX would start coming down and the GEX ratio would continue to drop as it is spot price sensitive also. Moving on to the SPXP delta balance, again separating the planes above and below spot price. The green is the out of the money call speculation. So again, negative slope heading into today. So as I just discussed with the true delta zero, true gamma zero, as well as the GEX ratio, we are seeing some of the short dated call gamma being removed from the complex. So whether that is out of the money call speculation waning or SPX spot price continuing to drop and removing those out of the money calls is one of two ways that this ratio can change. And then the in the money calls below us continues to stay fairly strong as a positive slope here. So again, no change there. And then you see our delta balance being pegged at 1. So no significant change in the overall bullish structure or positioning. But again, we just kind of like to watch these divergence as SPX price moves higher. Does the out of the money call speculation continue to support that price, or does it start to give us an overall divergence? Again, not saying you completely go short the overall market, but you just continue to watch this overall structure change moving forward, and you just be ready if the overall right-hand plane and left-hand plane continue to drop and we see delta balance drop, then we would look for hedging to the downside within this overall uptrend in the market. Moving on to the SPXP 0DT for today, I think we have a good game plan for today. We've outlined the transition area up here at GEX transition at 6,400 and 6,405. This is being drawn up here because of the net short position of these short calls, which we've identified up here. And then our DEX transition down here at 6,370 to 6,345. And we have the drunken sailor range, which is our low exposure area. You'll notice these local areas here of total OI. So how do you use this chart? If you're looking at just the total OI and if you're expecting moves to the upside or downside, we like to look for peaks within this overall structure. And these are areas that may be difficult to move above unless we have the intraday volume metrics to push us above those significant large OI levels. So 6415 would be that first kind of local significant OI at 7,748 contracts. So you need a significant amount of intraday volume via the volume metrics, market speculators, opening out of the money calls to the upside to move through these overall areas at 6415 and 6420. Obviously, this net short strike is going to be an area magnet that we could be drawn to at 6,400. So we'll watch how price acts or reacts around that. And then again, watching our intraday volume metrics will be crucially important to see if we're seeing out of the money call speculation as we start driving towards this area. And then does it flatten out via the call centroids and put centroids, or are we seeing, as we drive into this area, significant change in the rate of change and our slopes of our call and put centroids to the downside, indicating that as we were reaching these levels, we're most likely seeing some monetization of the overall out of the money calls, and then we're starting to see the overall put speculation hedging to the downside. So a couple plays for today. If we reach the 6,400 level and we start seeing some failure and choppiness, and we start seeing some turning down in our overall intraday volume metrics, we look for a short back towards the top of the drunken sailor range at 63.75. The initial trade would be if we open at 63.75, the top of the drunken sailor range, and we start moving above that. That would be a long up towards the 6,400 level. Those would be the first two trades you'd be looking at for the day. If we drop within the overall drunken sailor range and open at the 63.75 level and see failure, we'd look for an opportunity to short. You see these very low exposure areas. This may be an opportunity for price to drop rapidly through these areas, depending again what our volume intraday volume metrics are telling us. So that would be a short from this overall area, 63.75, 63.70, the top of transition back towards 63.45. Again, not anticipating that we drop below the 63.45 unless again we see a significant change in sentiment and structure. So that would be an opportunity to go long for a move back up towards 63.75, and then below 63.45 with a significant amount of intraday volume as well as MTM turning down, we look for an opportunity to short for a move possible back down towards the quarter level, 63.25, and then 6,300, as we do have net short area down here. And you'll see this large significant total OI down here in the money calls gradient here. So we'll continue to watch these areas and see if we see any change as we move throughout the day. But again, that would be our trading plan for the day, long 63.75 to 6,400. If we do move through 6,400, we'd be looking for 64.15, most likely profit taking. If we did get through 64.15, again, with a large significant amount of volume intraday, we'll be looking up here at 64.45 and 64.50. Again, extreme large gamma glob up there, not anticipating we move above that level. In the overall SPX game plan today, again, not financial advice, but we've discussed about having some opportunities to position some overall options plays around the 6,400 level, depending on how the MTM as well as the overall volume metrics of our call and put centroid look. Once we've reached these levels, again, around 63.75 will be crucial, 63.45, 6,400, and then if we drop below 64.45, we'd be looking for 63.25 and 6,300 to the downside. Again, quick takeaway, we're call dominated, significant amount of OI for today, so any pullback most likely will be supportive, and we'll look at the net stack command next. Net stack command, a high sensitivity level, so we've discussed the 6,400 level. Those out of the money calls, it has a negative strike because those calls are actually short when the right hand plane integral. To the downside, just a large amount of in the money calls. This will continue to be supportive as long as we're above those strikes for today. And net gamma out of the money puts, net charm out of the money puts at 6,300. Again, large left hand plane integral. Again, if we're above that level, these will continue to grow and those will be supportive on any pullback. And then to the upside, we see 64.15, those out of the money calls. That's why we talked about that level. Most likely an area of monetization. Again, unless we drive through that level, again, out of the money calls, charm on those. Again, will continue to grow above us. So again, you're pretty much locked between these two levels unless the intraday volume metrics drive us through any of these key sensitivity levels. So moving on to the open. So this is a SPX Spread X. This is kind of where we may open at. I've drawn the drunken sailor range. This VWAP is on here. Obviously, this is just from the overnight hours and extra session here. But again, the top of the drunken sailor range, 63.75. You see that's going to be a very crucial strike for us to move through for a long or a rejection for a possible move back down towards the 63.45 level. So we've already identified this pre-market. Make sure you mark this on your chart. Again, high sensitivity level, high importance area as we continue to chop around here pre-market. So hopefully that helps you with the game plan for today. We'll post some intraday volumetric stuff as the day goes on, as well as any updated changes that we're seeing. Thanks everybody for joining us. I'll hang around for another minute if anybody wants to go over single stocks or discuss any of the game plan for today or any other of the tools that I have went over. As well as you can look at these pre-market trading view levels from our key gamma delta levels this morning cues that are testing the P-trans level. Obviously important to stay above, to stay in a positive gamma. Call dominated overall structure for an ability to push higher. If we drop down towards the 0 level, again, that'd be an opportunity possibly to get long. If we see some supportive type action, then you see SPY 634, obviously just way above that level at the moment. So any pullback to that would be an opportunity to get involved long on the market and continue to be supportive area. And the confluence, another thing I forgot to discuss, sorry, the confluence of the COTMP this morning and the bottom of the drunken sailor range will be important also. Our proprietary level here at Game Edge of COTMP is where out of the money puts become in the money. And again, this is historically an area where you see a bounce or monetization of those short-term put holders, and you'll see a drive back to the upside. So again, put these levels on your chart as you're heading into the day if you're not a Game Edge member, and just watch how price acts or reacts around these levels. And then come join us in Discord and follow our education, and we'll be able to discuss these more in depth and the whys of why we put these on our charts and how we use these to help obviously your trading day and become a more profitable trader and have greater confidence of taking trades around these key gamma delta levels. So anyway, thanks for joining us. Everybody make it a great Friday. Have a great weekend, and we'll see you later.